Hi, welcome. My name is Akshay Kinkre to the second webinar we are having after the last one on 24th. And this is more of a free-flowing discussion that we'll have on the top 10 critical topics on transfer pricing from India and the Dutch perspective. And this time we have Theo Elshot here in India with me. And I think you're here for the last 2-3 weeks, and you have toured around India, met few clients, did a lot of stuff while you're here, and we'd love to know more about it and also the transfer pricing side of it.
I think if you would like, thank you for the nice words. If you would like to understand somebody and a country and tax and culture, then you need to meet each other. That's the reason that we discussed it a couple of years. To COVID, it was not possible.
Yeah.
Now it is, and to be honest, I learned a lot about India, not only TP, but almost also other things. So it's an incredible journey because to a country that's so developing so fast. It's unbelievable. There's so much history, culture, and the economy growing as hell, and also the people we met, and the young people we saw in every place. So it was really an unbelievable journey. And on Thursday we go home.
Right.
But to be honest, wouldn't be bad to stay longer. But in the end, home is home.
Okay. The last presentation we had was on 24th of November, and you were not in India, and today you are here. So it's a lot different, isn't it?
It is in all matters because we understand now each other and everything far better. And when you go home, because when you go to India, people tell you what to expect and how to behave and what to watch out for. And so completely different, so more developed, safe and sound than you thought of it when you came in. So you go home with another perspective. Thank you for that.
You lost all the luggage. You got every bit of it back, isn't it?
Yeah. We traveled and we lost the luggage, so I even had to buy local stuff, a kurta. For this, I took my own shirt again. But in the end, everything went well. We have our luggage back, and the people were helping us a lot. So really,
great to know.
And maybe as a last comment, I think the people of India should be even more proud of their country. They are still so serving orientated, etc. But you see so much development, and the young people now going out to other countries, to Cambridge, to learn English, to go out. So I think if you look at this country in a couple of years, then it will be the next step, and you will be the biggest on population as well.
Yeah, but already on the top 5 in terms of GDP.
So that's incredible. And when you go here and you go to the Taj Mahal, you go to the fortress, nobody knows about it, but they have here a wall of 36 kilometers. That is the second biggest wall next to the Chinese wall.
Yeah.
And if you see that it's 7 meters thick and you walk on it, and then you go 1,100 meters high, climbing all the time, unbelievable.
Great. So coming back to TP, yeah. I think India is different overall, and I think even from a transfer pricing point of view, and that's why we are having this webinar today, to look at the perspectives from the India side as well as the Dutch side.
Because we will go into a couple of areas, because if I discuss India and TP with head of tax, mostly they say, I don't understand it very well. And then you get all kinds of mistakes or problems into it. And I think now we put our conscious mind on what's the difference, but also what really links us to it in TP. We can be far better in helping them and safeguarding from problems and penalties.
So again, a quick introduction. Akshay Kinkre, I am the founder and leader at Transprise Tax Advisors. Transprise is a strategic alliance partner for Quantera Global, based out of Mumbai, and our focus is transfer pricing and global transfer pricing.
And we started 10 years ago. Your place, my place. We know each other now for almost 9 years or more.
More than that, 9.5.
9.5 years. So we started almost at the same time. And I'm Theo Elsof. I'm one of the founding fathers of Frontier Global in 2013. And I think we went in all possible angles on TP and discussed it a lot. So let's see how we can manage this hour that we get the most out of it for the people.
Absolutely. So that's a quick agenda on the cards, but let's just directly jump in to the first topic. That's a Dutch boat, right? That's a Dutch ship. First MNC ever globally was set up by the Dutch guys, the Netherlands in India. That was back in 1604. And only post that the Britishers came in. The original concept of multinational corporation started between Netherlands and India. I'm not too sure if you knew this.
We call it the Verenigde Oceanische Compagnie.
Right.
Okay, and I know the history because if you go to Rotterdam, you see signs of it still.
Okay, yes. So the Netherlands and India both ranked in top 5 as business partners. The business relationship has started with spices and teas and cotton, grown very strong on the financial side. There are so many Dutch companies in India. So many Indian promoters have their bases in the Netherlands. So Netherlands is looked as one of the gateways to Europe from an India point of view. Indian GDP now just over 3 trillion. We are all looking at and aiming at a 5 trillion economy. We had that view just before the COVID. COVID derailed us, but surely next 2 to 3 years, I'm sure we'll look at the 5 trillion mark very soon. Today, it's the 5th largest economy. Overall, we just overtook Britain this year, and 3rd as per the purchasing power parity. And I think, as you rightly said, young talent, a lot of workforce. So we have a very active startup and overall ecosystem. We have a great Make in India system with all tax boost, with the boost from the business point of view, and a comfortable economy growing at a 7+% year on year.
We are jealous about the growth rate, but I think what we are having both is entrepreneurship.
Right.
Like the Dutch, if you go to India, you see all those people wants to grow, wants to develop, wants to do the next thing, and I'm very interested in also me. I went into a lot of pictures, so sometimes I feel a bit Brad Pitt, but I'm not lookalike, not at all. But let's see that they are interested in the world. I met a couple of nice clients. You have a lot of clients, but nice clients which are also looking outside.
Yeah.
So I think together we can help all the clients from the Netherlands, Europe coming in, and India going out. And that will be a beautiful way of cooperation.
Because transfer pricing and international tax is never one way. It is always going to be a two-way street.
It is also 2 sides of the transaction.
Yeah.
Always. Otherwise, there is no transaction.
Is that you, Theo?
It looks like, but I said in the preparation, it looks more like a Brit than a Dutch guy. I don't know why. And he looks a little bit older than me. Sorry.
But he's relaxed.
He's relaxed, and I'm always business. But why it's in? I think a picture I like, I dislike, because more and more tax authorities and countries are perceiving entrepreneurs and corporations like the right side. People that are lazy, have a lot of money, don't pay tax, and have leisure time all the time. And that gives a perception that I saw something like it in a Dutch newspaper, a high-valued newspaper, with a perception that those people should pay, and corporations should pay more tax. And to be honest, I think maybe in the past there was more planning, but nowadays multinationals are more for certainty than for tax planning and for competing, having all the compliance issue in the company. So if you look at what's really happening, then that picture I dislike. But being there, I think it is nice. It's good to be there. So why is this happening? I think countries need income. There's Europe, there's India. If you saw the Corona times, in Europe the war is going on, everything. And a lot of subsidies are going to people and the corporations that has to be paid for. So what I think is that there will be far more TP audits are more aggressive, and therefore also the perception it helps. Because by helping that guy, he should pay more tax. And then you see that certainty is more important for corporations than a lower tax rate. That's happening at the moment. So the message is be prepared. Yeah? Don't sit the whole day in the swimming pool, but really do something about it. And that starts with the TP as a board issue. Maybe
Theo, 10 to 8 years back, India was perceived as very highly aggressive country on the transfer pricing side. Things have changed today. From a TP point of view, it's more risk-based audits that we do. It's more qualitative in nature. And there was yesterday's news that India has achieved 29% more direct tax collection. So which means on the growth side, the businesses are growing, the tax collection is happening. Ideally, there is no reason to be aggressive. However, we cannot be complacent. We need to also look at doing things the right way so that we are not taken advantage of. So countries need income for sure. And I think transfer pricing audits or assessments will only grow more and bring a lot of certainty.
Yeah, I agree. I think that's if you look for what's happening, you see that India was progressive, went into more better APA practice, into more talking to the company than going to them with an adjustment mind. In Europe, you see a little bit change towards more aggressiveness.
Right.
Like in the Netherlands, I see more and more that they are taking a formal position. They don't take the time to really understand it, but coming in with the position. And that's not okay. That's really is first to try to understand the company and then try to be understood to them.
Are these not the negative impacts of BEPS? Because since 2013, there has been this anti-avoidance wave that is going ahead. Possibly.
That perception on the right side. And the man in a swimming pool. And that has led to a lot of further documentation requirements. Transparency is good. I'm in favor of transparency, but do it in a right way.
Right.
To try to understand each other, to penalize the other one. And there are also a lot of new kids on the block. I thought that the Pillar 2 will come along in 2024. It is happening, and then you have to document it, like the mandatory disclosure rules. And the public CBCR is coming. DEBRA, that's debt equity biased reduce allowance. It will mean that the interest will be still deductible but limited, more limited.
That's 20% for you, right?
Yeah, and on the equity side there will be some compensation so that you get not so different way of treating it from the tax side. But that all will lead to a lot of documentation requirements and search for data. I was in Amsterdam in a conference for 2 days on transfer pricing, and at least one day it was all about data. We have the data to fulfill all those documentation requirements. That's for a TP specialist who was formerly looking at Article 8B or something like it. A very different way of discussing.
And with, I think, more of data is automation, right? That's your next point.
That's the next point. I think we have in the Netherlands now had 3 mastermind meetings with 15 head of tax, big ones, all about automation. What's happening, what they need for automation. And it's already 3 times, but why? Because they each ask for a 4th, 5th or 6th time. Because this is something they have to look into, otherwise you can't control it anymore. Document it and have an audit trail. So that's a lot what's happening in the globe. And in India, you see that there is also a lot of automation and software used.
Yeah, I think we'll speak more about it. We have a special slide on automation, so surely we'll go a little bit deeper there.
Yeah. This we could discuss because when you go in a country with your own eyes and your own mindset, and then judge what's happening, there's always a confusion.
Yeah.
Because you don't really interpret it or feel what's happening in that country. And it seems that we have the same way of when we go from the Netherlands or Europe to India, that we try to understand things like the high markup or the methods used or interpretation possibilities. And then we go in and we don't understand each other. Can you give some flash on that there?
So the idea is to communicate, but the languages could be different. India has more than 800 languages. Right? Similarly, on the transfer pricing side, no, everybody doesn't follow OECD.
Mhm.
There are other guidelines which are followed, right? And India follows the UN transfer pricing guidelines. It's more source balanced. OECD is more residence balanced. So there is a certain difference with both of these, and this is something that should be understood because these are two separate communication items, but again these are separate languages, right? There are certain positions which are elaborated in the UN transfer pricing manual or guidelines.
Mhm.
The OECD might be more often updated, and there is a particular task force which is working on it, which may not be the case with the UN model, but there are certain principle related stuff which is already there. From an Indian TP law point of view,
Mhm.
it's embedded in the Income Tax Act.
Okay.
There is a reference to intellectual property. There is a reference to intra-group services. There is a reference to cost contribution of financial transactions, but there are no guidelines around it in the law,
Also,
which I think is very different from Netherlands because you have the guidelines which
it is seen as law because it is one interpretation of the Minister of Finance, and that's seen more as law. Obviously, you can go to court and challenge it, but that's difficult because also the court sees it more as something to obey almost.
Right.
And they have that's also what's happening. The court decisions are more and more favorable for tax authorities, so because the man in the pool also does his work for the judges. Because you have to be very well prepared for this. But so the guidelines in the Netherlands are important. Yeah? And we have another point of view, because it is in the guidelines, you have a lot of interpretation possibilities as well, because you know the concept. You can use the concept and you look at it from different angles. And I thought in India you are more restricted by the law.
So it is the law for sure. India does have, there is some persuasive value of OECD transfer pricing guidelines. But because India is not a member of OECD and it's only an observer nation, the entire guidelines doesn't apply on the Indian side. It has a persuasive value in the courts, but we cannot adopt it in the way how we should. So whenever anybody from, say, Europe is coming to India to do business, I don't think there should be a preconceived notion that everything in OECD will be followed by India. So there would be differences overall from a transfer pricing point of view.
They're going to the high markup on another slide, but those items are also based on that. And so when you go in with, I had a couple of this discussion, go in with that mindset as the head of tax from Europe into India, then it could be that you're not very happy in the discussion because you really don't understand what's happening.
Yeah.
So you really should look at it from the eyes of people in India that explain it to you, and then you can take your position.
Maybe a more of a balancing act rather than a one-sided thought.
You had a couple of more of the items. Okay, we'll discuss APAs further on the road.
Yeah. But I think TP documentation is something which is accompanied with the transfer pricing return in India, which is not there in Netherlands. TP return is a 3CEB that is undertaken by a chartered accountant.
And then we discussed that even you can also have a certified opinion about TP documentation of a company.
Right.
And that has value for the.
Absolutely.
Yeah. So that's not something which we could do. We do documentation, but then it goes to the tax authorities and they have an opinion about it. But you really can certify it that you see this is arm's length and we think this is defendable.
So the government puts a lot of responsibility on the chartered accountants to scrutinize the transaction at the first level.
Okay.
And also government puts a lot of trust on us while we are dealing into certain things or whether the taxpayer is doing the right thing or not. So it's a lot valuable even for the taxpayer and also from the government's point of view.
And for somebody that doesn't know it and comes into India, that's as if you were part of the tax authorities.
Yeah.
You don't know it, and you come in with that mindset to helping the companies, but you do it with that certification and really be very critical on it. Huh?
Yeah. So our focus is always what is the right thing to do in a particular situation. Facts might change, but in that position, what is the right thing to do for that fact?
Yeah, and that's I think a very perfect example of that you don't come in with your own mindset and perception, but that you have to understand what's happening and what's possible. Huh? Because at the other side of it, if you understand it, and we discussed the APS a couple of times, it's far more possible than you think on really get certainty and then have something in that really defends you.
Yeah.
Okay. Comparability. That's
the heart of transfer pricing.
The cornerstone of everything.
The reason I put this slide here is because this is the crux. Because if there are things which are going to be different in the heart, the entire topic is going to be different. And it's very important for both the jurisdictions to understand what is the difference in comparability, because for what might seem comparable to me may not be comparable to you. And in that case, the definition of arm's length price could be very different for you and me.
Discuss the range of data. If we have a range, then we use mostly in the quartile range.
Right.
It's 25 off and 25 off on both sides, and we get then 50% as the range.
Right.
That's not the way you do it in India.
So we look at the 35th percentile and the 65th percentile. So we cut the 10 on both the sides and we have narrowed it down. So if you are, say, at 30th percentile, from a Dutch point of view, you are at arm's length. But from an Indian point of view, you are not at arm's length.
As an example. Yeah. And what we sometimes do, because if we have less comparables, that we use the full range. So that's something that's for testing, but that's not at all possible.
No.
I'm not saying that we do it a lot in the Netherlands, but sometimes when you have very low comparables and they match, it's not a very big range, then I try to sometimes have to use the full range. But that concept is not applicable.
So the range comes from rules, income tax rules. Rules is the way how it should be adopted. So anything outside 35th to 65th is not entertained from an Indian point of view.
And from an arm's length principle, that is strange, but all the companies you accepted are in the full range.
Yes, but we don't want those end companies. We want the sweet in between. So, but that's somewhere we need to balance, right? This is somewhere we need to balance. The other area to discuss is the local comparables. India has a huge database of companies. There is a proper procedure to upload the financials. We get to see all the financials around Indian companies and comparables. So there is no need to go outside India to find comparables. And India is a very different jurisdiction altogether.
Yeah.
The inflation rate is different. The percentages are different. So if we look at beyond India, I think we may not be doing the right comparability. Hence, there is a preference of local comparables over foreign comparables.
Because we discussed, because if you go to Europe, US, etc., and the percentages are far lower. So when I discuss that with head of tax, they say cost plus 17 makes no sense. If I go to India, that cost plus 30 or 25, you'll say this really makes sense because it is so different here. The growth rate, inflation, the development. The company needs to have that kind of profits to grow and be active in the market. Because also in inflation, if you count inflation, it's high, and cost plus now seems high, 20, but tomorrow it is low in this country.
Having a high inflation is not bad. Having a high inflation without growth is bad. So India has a high growth rate, it has high inflation. And if I want to do something where I need to earn 5% or 6%, I will just put it in a fixed deposits in the bank. So why should I be doing such a big business out of it? So if I need to do business, ideally I should be able to make much more than what my banks and my markets offer me. And that's the reason why we are looking at relatively high markups as compared to the European scenario.
And also in the markups, you can depending on how important it is, what is the cost base, because that's even more important. You can have a balance act, how to deal with it. And okay, another one is the filters. This may be something also to discuss. I think we in the Netherlands, we could have that problem in Europe, when you have comparables with low volumes, how to compare that with procurement. That's a good example.
Right.
Because procurement can be billions. When you go to comparables companies, you don't find third parties with that kind of volumes.
Right.
The same thing with sales could also be different. And do you have filters in India on those?
So it's again very subjective. Many a times tax authorities do appreciate filters, and many a times they don't.
Okay.
So it's again very factual, circumstantial in many cases. There is no law around filters.
Okay.
There is no best procedure around filters or practice around filters. But there are certain jurisprudence, case laws, which talks of certain range, which means you can go 10 times up, 10 times down. Again, there is nothing, this is all logic, which we are buying from jurisprudence. But we would like to compare ourselves with companies which are in the similar domain, similar areas, similar sales, but that may not always go well with the tax authorities. So again, an important difference in terms of how you approach on the size of the companies.
Then you have to acknowledge that you have maybe more court cases than we have on TP in India.
Absolutely.
And then you have to really understand what kind of court case, because that's also the way the tax authorities will look at you.
Yeah.
You have to understand what's happening there.
Yeah. We have to be always updated with various type of rulings coming out from various tribunals and high courts.
Yeah. Do we have something else I think important?
We can speak a little bit on the transactional model for comparability. I think India and Netherlands both look at transaction-based models, but there are often times where things need to be aggregated. If you look at the razor and the cartridge example, if you put together, one can be traded and other could be manufactured. But when you put together, it's a unit, and we need to look at a profitability of a unit put together and not as manufacturing and trading separately. So it's again circumstantial. This is again an area of litigation from an India point of view, which might be one of the sorted areas in Europe. What's your take?
And Europe, we also look at those kind of discussions, maybe less, but we call sometimes, can you combine them, what they're doing for you? We had a famous court case in 2002, I believe, on a Japanese company that had bicycles, motor bicycles, and something for your lawn or outside in your garden. And they took it together and made profit on the one and loss on the others. But in totality, they made a handsome profit. And the other, we call it intentional set-off. Intentional is that you are intentional doing the set-off, combining them and see it as the totality. And that was something that the court said that the company was dealing at arm's length by combining them, seeing more. But there is some tendency that they're looking at transactional at the moment. Tendency. So, okay. So
I think secret comparables in both the jurisdictions are not entertained. I think from MAP point of view, you had a view, right?
Yeah, in MAP, secret comparables can't be used. Tax authorities sometimes do, however, but there's not should be not be done. Only when you have countries talking to each other, like in a mutual agreement procedure or bilateral APA, and they can use secret comparables for each other, but never against the company.
Great.
That's how it works. I've myself been in a lot of maps with other countries, and the ones that they are used and sometimes misused. So not for today, but I had some discussions around the globe on those items.
You have been an AP authority in Netherlands, right? It's a lot to hear from you on those lines.
Yeah, I'm lucky to be in the tax authority side when everything was developed, 2000, 2007, everything a lot. And then in between, I was also heading the APA team from the Netherlands, and had the privilege to go around the globe to discuss and agree in map procedures with a lot of cultures. And then I learned first to read a book about the culture and the background, and then go into the case. Otherwise, you don't know what's happening and what's happening in the table. But it was a long story, and that time we did hundreds of APAs and multilateral APAs, and maps as well. So that was really 7 years of a lot of learning and doing. Yeah, it's great times. Yeah. Okay.
Quickly on the last topic of low value added services. India doesn't subscribe to the view of low value added services because it talks about cost plus 5. We have low value added services in our books, but that's only on the expenditure side, and that's only if you go under the safe harbor regime.
Okay.
So on the income side, if you are raising an invoice, you cannot raise it on cost plus 5. You need to undertake a local benchmarking. But on the payment side, if you are making an expenditure, yeah, so it could be cost plus 5, but the question there is the cost needs to be proven.
Yeah.
And we'll look at that slide particularly on the cost.
Burden of proof that you have a benefit.
Yeah.
In the Netherlands, this is often used for really low value added activities. Sometimes it's misused because if it's key management, there's no value added.
How about accounting?
Accounting, it depends if you are an accounting firm.
Yeah.
And it's no value added, but if you do admin, then that could be.
I think the definition covers accounting also as low value added.
Yeah, accounting in the multinational, that's true, but it depends, because if it's an accounting firm, it's a multinational, then it doesn't, because it should really have a low value add in the company. Accounting is one.
So subjective, it can raise litigations around.
That's true, yeah. And therefore, and also to say 5% is the minimum, that's also not true. If you have a search and you are below the 5 and you can defend it, and it can be lower than 5. And to be honest, it was in the beginning 2 to 5, but a lot of countries that were more doing services to other countries find 2 too low, so then they went to 5. So there's sometimes also politics. Eh? Yeah. Okay. Yeah, I think this is more important.
So, Theo, would you like to cover this, because this is almost like what our pillar built up is, right?
Yeah, that's true. Well, I think what covers this is that in 2013, when BEPS started, everybody in 2016, when you really needed documentation, started to make paper on what they have, and it started. And always try to be compliant to having paper. But what you see, but the discussions now going on, sometimes it's even better to not have that kind of paper, but the right ones. And they always start with a strategy on risk management on TTP, and that leads to have you the proper design. Is that something that's aligned with your business, and really accounts for an arm's length remuneration. And then you go to document it in the right way, not making this kind of paper thick file with the right ones that can be maintained and explained. And that will then go into the defense and how you go on with it. But the right defense is having the right design, right documentation, and defense is something which are you going to do. Going in, this is my defense on paper, or are you going to do more proactively? That whole strategy is, I think, the heart of the matter when I discuss it with the tax authority. Tax authority is the head of taxation, multinational. So it's really the 3 pillars. And they should be, if you have it, be also evaluated and reviewed each time, because also the company changes. So is this still the way to position your company?
I think these are the pillars based on which we as a firm value add to our clients on these specific 3 issues. And that covers overall transfer pricing for us, isn't it?
Yeah, because what you said when we had that meeting with around 30 clients on the second day was for here. Unbelievable fine discussion. And you really said, what's the purpose for the client is to?
Value add.
Value add. That's it, yeah. And that's also with this. So we try not to give product paper and say thank you, but really giving something that's really valued for the company in the way that they would like to have it. Yeah. Okay. I think that to combine that binds us a lot of the value add. Yeah. Okay. This is more discussed about with India.
This is, I would say, one of the important issues which is now in the transfer pricing domain as such.
Mhm.
The intragroup services, and especially happens because India is always at the receiving end of these services,
Yeah.
and India ends up in paying the management fees, the intercorporate charges to their foreign companies.
Yeah.
And it's generally going to be cost plus 5 in general cases.
There's a left side.
On the left side. But the issue is not so much plus 5. The issue here is that services are so intangible that the taxpayer is not able to prove that he has indeed received the service. So it's essential for taxpayer to prove through documentation that the service has been received by him.
Yeah.
How one could do that? It could be through emails, it could be actual provision of service, something like this, which is getting recorded, where there is a management which is talking with the Indian management, but all those records need to be maintained.
Show me the benefit.
That comes to the second stage. But
Yeah.
first is show me whether the service is provided or not.
Oh yeah, the real actual.
The real service. So if you are providing a transfer pricing service,
Right.
show me the report.
Yeah.
If you are providing an MIS service, show me the MIS.
What really was what they really did on functionality activity. That's the first thing.
Yeah.
And the second part is then what's the benefit of
The
it?
benefit test.
Because if you have done it, but I don't have benefit for it, then you still don't pass the test. I understand.
Yeah. And only when you look at both of these, the third one is whether you really needed it.
Yeah.
Okay, it benefited you, but whether you needed it for your business purpose, because if it is not for your business purpose, then it gets disallowed.
What you often see is that they documented the second and third part, but not the first one. Really, what's happened, what was the activity? Yeah. What we try to do, I try to do is to get projects with really clear examples of activities. And if you are 1 or 2 or 3 of those, then you're almost there. Yeah. And okay, and so there's a benefit.
And the fourth issue is on the allocations.
Okay.
Are you directly attributing things to India?
Okay.
Is there an allocation ratio? And if there is an allocation ratio, then prove why that particular allocation ratio and why not everything else.
Yeah.
So the issue is not around markup anymore in this case.
No.
It's all about proving the substance. And this is something that we already have, and we have done multiple projects like these to build an entire intragroup services for our clients at a global level. Yeah.
Okay.
So we have done certain things together on these. We have discussed on these, but it's very crucial to build an entire package and strategize.
I'm not going to talk about Brazil because there is a similar way, really the same items. I think also because I'm mostly on the paying side as well.
Yeah.
Exactly the same thing. Yeah, but what I see when we go, when India, a company in India provides services, I see mostly high, what we call markups. And what I see companies doing, that they go in with an audit and really maybe 4, 5, 6 years have an audit.
Right.
For each year and never completed a year.
Mm-hmm.
But we discussed that maybe in APA that would be something to do in India. Could you give some thoughts about that?
So, of course, we'll cover APA soon around this. But I think audit in India is every year of audit that we undertake.
Yeah.
And if there is a negative case in 1 year, it gets rolled forward to various years.
Continuously.
So it's not an issue of 1 year. If there's an issue of 1 year, then it trickles down into all the future years,
Yeah.
and possibly there could be a reopening of the past. So your entire yearly activities come under the risk.
It could be even 7, 8, 9 years because
It could be 6 years at least, all put together, if there is an issue that gets built up.
just because we were raising with APA, but let's just put it there. But I think that would be an instrument to be useful to get this kind of things
Absolutely.
out of the risk area.
Absolutely. This is very high risk, and this is what the taxpayer should consider if they have not applied their minds on intragroup services.
Yeah.
This is an area to focus.
And you can also have a rollback, I believe.
We can have a 4 years rollback in addition to 5 years forward.
9-year period you can cover. That's a long time. Okay, that's good. And maybe next slide. Yeah. Okay.
So this is all about Netherlands.
No.
You have been the pioneers in financial transactions.
I don't know.
So
we had a lot of discussions.
Holding structures, financial transactions, cash pooling,
all kinds of treasury activities, guarantees, credit ratings. What is the real arm's length leverage of a company, debt equity? And it was a very difficult discussion because if you looked at arm's length principle, that's not only transaction but also the financial transaction in the definition.
Right.
Mostly it stopped with the EBIT. And then the interest was in the past something that they tried to avoid a lot of interest deduction by having all kinds of tax provisions in the corporate income tax law. Very complex and growing and growing. And what the transfer pricing people did is try to get them some knowledge and guidance on how to treat really financial transactions in the company. And that happened. And in the Netherlands, I was in a part of that discussion. Also things like insurance companies, captives, interest, everything around it. And that started around like 2000 and never stopped in the way of thinking.
Right.
And what then happened, you saw that also to the COVID times, companies were more and more going for debt because they need to pay for all the costs and what's happening. Yeah? Some figures that really the debt to the GDP of a country, the debt went higher. So it is important to do something about the interest deductions. Yeah. And that led, I think, to the OECD to having financial transactions, a new guidance on it some time ago. And that was because of the reason what is happening on economics, but also the tax authorities were thinking of it. And they try to see how to avoid the erosion of the profits taxable base. And BEPS triggered that in 2013. And nowadays you see far more of those kind of discussions going on. In fact, like you, we have a financial team for years now because we foresaw that there was a lot of things going on. That's now happening. Like I said, there's a second part, the tax authorities still struggle with it. It's difficult because you have companies that has no debt at all, because that's the policy of the company. There are sometimes because the cultural thing is in it, and other companies have maybe 70 or 80% debt as a group. So there's a big range, and how to cope with it. So the tax authorities did a lot of knowledge sharing and discussing on the financial transaction. And what happened, in fact, in that field, that they first now, that also happened with the captives, don't look at is 4% okay, but look at the actual delineation of the transaction, what's really behind it. So looking at also the function as the risk performed by parties.
Right.
And that starts with it, so you get first a characterization. It could be that the discussion will not be on interest rate, but is it equity or debt as the first one? Then you look at the borrowing capacity of the company that gets a loan. And that part is sometimes forgotten, but when we start with defense, that will be the defense of it. Is the borrowing capacity as such that party could have had that loan from a third party as well? Sure. And that's something what's happening more and more. And then we go to credit ratings and the interest rate and the guarantee fees. So it is far more complex, far more to be done on documentation.
India is also growing on this speed. After the 2021 guidance, the tax authorities have also given a lot of importance to the financial transactions now. So it's no more just a naked rates anywhere where we are picking it up from certain websites. There needs to be certain study that needs to be undertaken around financial transactions. And that's why we have also built in certain infrastructure around us, which can help the clients on the financial transaction bit. And we have been doing this for past some years, but the importance today has grown up quite significantly.
A lot, because also documentation, you have far more to document, and also the questions comes up. I think things that as credit ratings with those guarantees.
Guarantees is a big issue.
A big issue at the moment, and that case that come up, and this is a difficult area.
Right.
And we will have later today with our teams a discussion on it. So we'll really see that as an item for cooperation and not. Oh, this is an item I only try to skip because it is really very important, and I try to skip it because it is something that could serve us also in Europe. But till now, I didn't get a lot of attention for this. But
So
maybe now it will.
hopefully there is no tax authority listening to us. Otherwise, they will learn something from this and apply it to the European scenario. So this is typically any sale that is made by intercompany within the group. There is a debtor that is booked, and the foreign company doesn't pay the Indian company on time. So there is a big time lapse, and for that, it could be assumed that the foreign company is indirectly funded by the Indian company. So there is an interest imputation that happens on such outstanding receivables. So it's treated as a quasi loan given to the foreign company.
Okay, but you see, there's sometimes really in a trade, accounts receivable and payable, that are like two sides of a coin.
Right.
So how can you get the risk of this more limited? What can you do about it? Because it's a difficult area.
It's very difficult. It's very factual, circumstantial. It might differ from case to case, but there are certain jurisprudence, there are certain thoughts around how to come out of this. But that's very strategic in nature. And this should not be an afterthought. This should be something that you should really plan well and then take a position. It's not that you have done the mistake and then you are taking a position. That's not how business is done.
It could lead to a lot of penalties and discussion.
It could lead to penalties. One of the ways to say that the Indian company was never an interest-bearing entity.
Okay.
It was a debt-free entity and it always was funded by equity, so it never paid debt. And hence the money which is outstanding should also not be covered through the debt mechanism.
So third-party comparison is also maybe kick in.
There could be third-party comparison. There could be working capital adjustments. You can argue that your collection period from the A's is lesser than the collection period from your third parties. These are various ways. I'm just trying to put it here, but this is not a mantra, or this is not some magic show that you can pick out certain things out of it and apply it to your situation.
Let's just be prepared and do this proactively and not when the question comes up.
Full documentation law.
We had this kind of discussions more like it's cash pooling, etc.
Right.
Because in a cash pool, when somebody always has a negative position, always, that doesn't seem like a cash pool position. That seems like funding. And that's something which we have. This is a little bit like it. Our concept. Okay, that's a big thing. This is also more, we discussed as well for non-residents in India. I, as a Dutch company, working with you and you're selling in India and paying me something could lead, although I don't have anything in India to a tax liability.
Yeah, so India follows the source as well as the residence rule. And it's different than what Europe understands as a source rule. Source rule is understood in Europe more from a PE point of view. But here, if you derive any type of income from India, say if it is interest, dividends, fees for technical services, you have royalties, there is a certain amount of tax withholding which is undertaken in the Indian jurisdiction. And when that happens, the non-resident is expected to pay taxes and also undertake tax compliances.
Okay.
So it goes beyond, and for the purpose of Indian tax, it's not only the residents who are the taxpayers, it's also the non-residents who are earning income from India. They are the taxpayers, even if they don't have a PE in India.
There's a certain threshold, but it's not high.
There is no threshold here.
No threshold.
No threshold here. And they are expected to do transfer pricing compliance, the non-residents. They are also expected to file their return of incomes in India under a specific section. So the compliance requirement is high, and for certain reasons, even the non-residents are attracted to India for the compliance purpose.
That means that if you go in with India with your perspective, then you could be in trouble. So you really need a good expert to guide you to this all.
Right.
Because there are different scenarios to avoid it, maybe, and you have to understand it.
It's just the law of the land, and somebody needs to understand it, respect it, and go ahead and do business. Theo, you have been in the tax authority side for so many years. I think none better than you can throw some light on
I
this.
don't know if that's the case, but I've been a lot in audits on both sides of the table. I've been in heavy audits with the tax authority. That was really tax planning around me at that time. That's not anymore there. That's really 2000, 2001, 2002, 2003 what happened. But now you see also on this side a lot of audits coming on and helping. I think what's the main message is when I'm asked to help, most often that's because they were not proactively processed. Meaning there was no process within the company, policies and process how to deal with, how to prepare for potential audits.
Right.
I think we have now such kind of procedures and practices. We can help the company by examples.
Yes.
Each has their own choice, but we can help them. But that's the first thing to do. Because mostly what I had to do is first trying to get the people on the table again, talking to each other, because there was a lot of things not okay happening, and communication. That's the second thing. Look at consistent communication and clear about it. And that's the first thing I did is to get people again together, and then going into what's necessary, the real documentation, the story. It should be consistent and aligned with the company. The whole defense should be consistent. And somebody that gets an audit in the country should have a policy how to deal with it. I've been in companies that had an audit in the country. They didn't know about the central level. Central level was already compromised in the country, compromise done.
Yeah.
And that compromise you couldn't take centrally. And then you have a problem. The whole thing should be a process proactively managed.
Like a standard operating procedure, right? So if there is a notice that is received, then what all you should do?
Yeah.
So either prepare for a TP audit or get prepared for TP litigation.
Yeah. The whole thing, and also, again, APAs. I was head of APA a couple of years, so I like APAs. Also, that's something should be in your process. And how to deal with mutual agreement procedures that you already know and don't choose for APS or I choose for it.
Right.
And this also is also preparation for audit if you have one.
Yeah.
And I have mental as a map how to deal with this as well. That should be totally in it and avoid, that's a real good one, avoid pure legal argumentation on local level. Because then you go to a court pure legally and you're not knowing what you're going into. So try to avoid it and involve on an early stage. And it's not because we are TP experts, but do it because we see more and more that court cases, if you are not well defended, that judges at the moment are aligned. They like to, they will help corporates even more than in the past.
Judges can see through, I think, they can see through a tax avoidance or a genuine business case. Sitting there, they clearly understand what's the issue. And if your documentation doesn't support your story, then you're gone.
And you're gone. And that's in the past, they try to balance the position, but you see that the balances are more and more going to tax authorities. So you really have to be careful in that part, and you have to put your act together there.
So in India also we see more and more cases now. Earlier it was on the taxpayer side. Now there are certain cases which are also going on the tax authorities side.
Because then they play the burden of proof game. So at the moment that you don't have well documented everything, then the burden of proof is not fulfilled.
Right.
And then you have more possibilities to have a negative impact on the outcome of the court case. And that's really a couple of recent court cases. I see that. Okay.
So let's quickly dive into APAs. I think one of my favorite topics. You have been there, done that. India started APA almost 10 years back. We celebrate 10 years for APA this year in 2022. More than 1,300 applications filed.
1,300.
Over the 10 years.
Okay, there's a lot.
Yeah, I think it would have reached almost a half stage in terms of clearance by now. But you look at the the year of certainty. It's 2250 years of certainty, and that's the court time that is saved in litigation. So this really gives a boost to the entire multinational ecosystem to look at advanced pricing agreements. So rather than getting into litigation and confrontations, it's good to be certain. It's good to be clear to start with. It's a good program to go in. It's one of the success. The only complaint that I have is that in India, it's pretty slow. It takes around 30 to 36 months for one APA to finalize, which is not the case with Netherlands. We'd love to hear more from you around that. But that's the thing which I feel would need improvement. Otherwise, I see a shift from unilateral APAs to more of a bilateral APAs now, where India as a country is more now accepted as one of the transfer pricing speaking countries on the platform, and there is a good logical discussion happening. We have signed certain good APAs with Netherlands and US. So
I think that in the Netherlands, although we see the same trend from unilateral to bilateral. Because when I was in the tax authorities, there's also in the reports or publicly to the public known, we had hundreds of APAs. More unilateral. But we were so successful in doing so that we got a lot of criticism about it. And to be honest, I don't think that was reasonable because it was really obviously compliant full. I can explain it to everybody, but it really was a trend that one should be more compliant and more looking to everything. And that's happening. So the unilateral APAs are a little slowing down. Also because in our legislation, we had some things on substance, no APAs with countries that has low tax rate.
Right.
And so there was a lot of things in the law that limited the possibility of an APA. And there's a far more formalization on what's necessary. The whole case should be so well documented that it takes longer. Because I made sometimes the joke that if I have a piece of paper that's white, you can this is white and you have to accept it. Nowadays I have to give the source code and the color code to it, as an example. That leads to far more formalities and a little bit in the beginning to more time. This was 2019 mostly, and now we see that it is increasing again. So we learn about it, we know what has to be done, so we see more unilateral again. But more important, bi and multilateral APAs are coming on. That's really the trend. And in the Netherlands, we had a new team. In the past, bi and multilateral APAs and mutual agreement procedures were handled by the Minister of Finance. But because those are going up, and also the MEP because it's going up, we have now a separate team in the tax authorities that deal with it and are able to make decisions on it. And that team is now there. So, yeah, we see that is going on. And I think personally that giving the audits are more intense, becoming on, the APA is in the Netherlands something to be really regarded as a potential way of helping the company to have more certainty. And that's really happening at the moment. And there is also more focus on financial APAs, of financials.
So I think the bottom line is certainty, right? That's what the clients need, and that's what APA can offer you.
Real value add. And I have a discussion with some companies that say I don't like APAs, but I think then why not? You can plan the timing. I like your pictures, the right fence. You better to be prepared, have certainty and dry. Then you have to go in with audits on the moment that you can't afford them at time, and you're not so well prepared because in APA you should be well prepared. And that all brings down that the risk goes down. And I understand when you say I don't like it. I understand it a little bit, but I think you should reconsider that. Yeah. And as the last one, automation.
I think we spoke to so many clients around automation. I think 100% of the clients have said we need some type of an automation. and
Also
which
in-
brings in which
Also in India.
also in India, which brings in a lot of standardization, which helps in planning resources because the resources are scarce. Yeah. Every time you can't go to the local advisors to seek advice on, or to just ask him to do some mundane documentation. It's very important that there is certain automated way to do certain things in a way which is acceptable and standardized.
Yeah, we discussed, I think also in the Netherlands, on half of the meetings I have, so maybe even more, automation is an important part of the discussion. Because there's so much coming on documentation and requirements, and you have to know the due dates, etc. And this coming on each year, so you have to have such standardization, and that you don't have to type each year the same report on your PC, but that's something that follows each other. So that's the reason I said when we don't have that innovation, we still would push the car there, no have wheels. So we discussed it today with the client, standardization. So what are the challenges? Standardization, efficiency, consistency,
and cost.
cost and control, and that's all in this. So I think that will be hopefully a nice client going forward, because a big one, but really that would lead to a lot of I think savings and controls.
I think control is the most important part. Once you have a control on your transfer prices, your business is sorted.
Yeah. Otherwise, in former days, the head of tax went to a country when they had questions, discussed it there, came back and said everything is okay. But nowadays, with so many things going on, documentation and all this, that's not the way to go.
Some of our clients are like 60 countries, 200 companies. God knows how will that head of tax survive.
And then in our system, comparability, the system we built, everything is in the system. So all the versions, who did it, who audited, we
train.
All the trail is in, everything, and also control monitoring, but also analyzing things like CBSR. And you need it, because that's the way also tax authorities will look at it. And by the way, I have to see here, but the version 3.0, and we did it, is not in here. It is maybe in your database or in the cloud somewhere, but here it is something you can really work on. As a tax team, you can have your own system working for you, so not depending on the IT department. That's also an important thing. Yeah. Okay. Maybe we are running out of time. Huh? Yeah.
But I think the important message on this slide is everything cannot be outsourced or everything cannot be insourced.
Yeah.
You need to maintain a balance around it. And it's very important that the internal colleagues in a company takes responsibility of it. And all the responsibility should not be placed on an advisor to just figure out on transfer pricing. Advisors are there for you, but use them in a better way which benefits the company.
That's the discussion we mostly having. How would you like to be supported in the way that you would be the best supported?
Yeah.
I can have a lot of views, but that's the company that is in charge, but also responsibilities you can't delegate. You can delegate tasks, things to do, but not responsibilities. And another way, a new company that outsources TP in totality, but they have no knowledge anymore. So they're so depending on somebody else that I wouldn't do that.
Maintain a balance.
Maintain the balance. Yeah. And this is more the.
I think this is a crystal ball for 2023 and a summary in total. What could be the issues? It's mainly for the audience to just quickly go through it.
Yeah, it's not for us. I think look at it. Pillar 2 is coming. ESG is not a tax item, but it's also a lot of the things they're doing coming on. I think this is it. This is what we discussed. Okay, 10 years. They don't. Now we shake hands because we started in 2013 with Transprice, Human Global.
Yeah.
And next year we will have some kind of webinars and exchange of things.
Right. Absolutely. 2023 is a special year for both of us.
I like the can. And the right side, the bean on the left.
Select the best one.
Okay.
Great. So I think this is it for today. We can take few questions if they are already there.
Normally I've looked at it, but I think for now, I think we will take them on board, and then see if there are questions in. Yeah.
Are there any questions?
Okay.
No questions. Looks like we have been very clear today.
Okay, that's good. And may I say as a finalization that I really love to be in India. It will not change my total life, but I went to the Gandhi Museum in Mumbai, and really, if I look at that's unbelievable. I was saying about Einstein, he said that such a person walked on Earth is a miracle. And I will take that a little bit back when I go home.
Good to know.
To be more balanced, to be a little bit more relaxed. That I will take back, and it was so. Thank you for that.
Thank you.
Thank you.